Hey everyone, I'm Szafron. This is Kitco News. Don't forget to hit the subscribe button. Well, it's been a big year so far for the metals market, and according to the latest data from the World Platinum Investment Council, platinum is facing its largest supply deficit in over a decade, with supply exceeding demand by more than 1 million ounces. Yet despite this massive gap, prices haven't responded as many would expect, leaving investors questioning the factors driving the disconnect. Now, the situation in China is also having an impact. After returning from a week-long holiday, China decided against releasing further stimulus measures, which many investors had hoped for. Now, this has sent a couple of ripples through the commodity markets, affecting platinum, some other metals. Gold, meanwhile, has held steady, prices up almost 30% over the past year. And we're seeing some intriguing changes in retail interest. Major retailers like Costco have even begun offering platinum bars alongside gold, making the metals more accessible to a broader range of investors. And joining me is Edward Sterck. He's the Director of Research at the World Platinum Investment Council. For those unfamiliar, the WPIC is an organization that provides market intelligence to promote and support global investment in platinum. Hey, Ed, thanks for joining us today.
Hi, Jeremy. Well, thank you very much for the invitation to come on and chat to you.
Yeah, of course. I know that you're across the pond over there in London, and so we'll try and get you out of here as soon as we can. And it's been an interesting time. The platinum and other platinum group metals facing significant supply challenges, growing industrial uses, and then of course this increasing interest from the retail investors. There's a lot to unpack here. So let's start with the supply side. What's really driving this massive deficit, and why aren't prices reflecting these pressures? You know, they're sitting around $950, $1,000 an ounce on the U.S. side. Talk to me about the supply-demand problem.
Yeah, so in terms of the supply, what's really driving that at the moment, or the constraint around supply, is we've seen a big reset in the prices of palladium and rhodium over the last few years. From what were all-time highs, they've come down, really quite substantially. And for the producers, they don't produce platinum in isolation. They produce it as in coordination with the other platinum group metals, including palladium and rhodium, with gold, copper, nickel, and chrome. And so the contraction in the prices of palladium and rhodium have really dented the economic health of mining operations effectively. And we're seeing producers react to that by restructuring those operations, and effectively trying to cut costs. Now, that's really sort of limited mine supply, but we've also seen some significant headwinds to recycling supply. So around 25% of platinum's supply in any given year comes from recycling. That's predominantly from the end-of-life vehicles. So it's taking the catalytic converters off them and recovering the PGMs from those catalytic converters. And the challenge for recycling supply has just been a shortage of end-of-life vehicles. People are driving existing vehicles for longer. They last longer. You've also got lifestyle changes in terms of more working from home, less commuting. I suspect also that people who are buying battery electric vehicles are just holding on to their old internal combustion engine vehicles for longer as a backup in case they want to make a long distance journey or they run into any charging infrastructure challenges. So these are all things that are holding the supply back. And as you mentioned earlier, we've got this record deficit of over 1 million ounces as a result of that.
Yeah, it's been fascinating to watch. I mean, on the macro front, before we get into the auto side, some experts argue that inflation, central bank actions like these interest rate changes, they should have already pushed platinum prices higher. I mean, is it possible that market sentiment and speculation are playing a bigger role in keeping prices down than this actual supply and demand?
I think that is a factor in the near term. It's unlikely to persist forever. So we have entered a rate cutting cycle generally around the world, and obviously that's helpful in terms of investor demand for non-yielding assets like platinum. In a higher rate environment, it's quite hard for non-yielding assets to compete with things like the equity market and so on, and bond markets. But as those rates come down, that improves the investment thesis, if you like, for platinum and also for other non-yielding assets, for all precious metals ultimately. So I think that's probably a factor as well. But one of the things that really has perhaps weighed on price sentiment to a degree has been just the rise of battery electric vehicles. The pace of the shift in the drivetrain mix towards battery electric vehicles is something that has just effectively given people within the market the view that a fairly significant proportion of platinum's end demand will disappear. In fact, what we've actually seen is automotive demand is at its highest now that it has been for a number of years. And that's a result of a couple of different factors. Firstly, battery electric vehicle market penetration rates are actually lagging expectations. And you've also got ongoing substitution of platinum for palladium in gasoline vehicles, and that's helped support total automotive demand for platinum. So there are a number of factors at play here that I just think are not really being fully absorbed by the price as yet, but probably will be at some point in the future.
Yeah, I mean, you mentioned those electric vehicles. They're becoming more popular, automakers moving away from those traditional combustion engines, but also a lot of interest in hybrids. I mean, we kind of saw this peak level of everyone wanting to go electric. And as you mentioned, people still want some petrol in case there's some problems with range, I guess, that range anxiety. So, talk to me about what's driving this surge in platinum demand in the auto sector.
So what we're really seeing is, the early adopters of battery electric vehicles have made the transition. They did that with the help of government subsidies and tax incentives and so on. Those have now been gradually scaled back. Governments were effectively trying to fund that, or partially fund that transition into battery electric vehicles. And as economies of scale have grown, with battery vehicle production numbers going up, naturally they've tried to scale back the amount of support they're providing to the industry. The challenge now is the next cohort of consumers effectively don't have that support. They're naturally more skeptical about making the transition, and so they're just that bit more reluctant. Now, for the automakers, this presents a problem for them. Effectively, they still have to meet their fleet-wide CO2 reduction targets that are set by regulators around the world. And if they can't get consumers to buy battery electric vehicles, that means that they really have to focus on hybrid vehicles as the alternative. Now, for platinum and PGMs in general, hybrid vehicles actually use more platinum than a pure internal combustion engine vehicle. And this is a result of the engine in that vehicle being turned on and off more frequently. And so it's operating at a lower temperature. And to compensate for that in terms of ensuring that you meet the emissions limits effectively, that compensation requires adding more PGMs per vehicle in order to ensure that they're compliant. So it's helpful. It's about a 10 to 15% demand bump from hybrid vehicles versus that pure ICE equivalent.
And, we got to talk about China here. We said off the top, a lot of people expecting a little bit more stimulus coming into that market. It's been a huge driver of platinum investment this year. I mean, we've seen central bank purchases on the gold side too. Talk to me about the issues here. How sustainable is the trend if China's economy continues to slow?
So China is the biggest market for platinum globally. And as a result, what goes on in China does have a pretty big bearing on overall sort of platinum demand. Fortunately, most of the end uses for platinum are relatively well protected against Chinese economic slowdown. So the automotive market, at the margins, we would probably see a little bit of a shrinking in terms of demand there, but fundamentally regulations in terms of emissions limits continue to tighten. And so, that kind of offsets any weakness in vehicle production or sales demand numbers. Other industrial applications that use platinum are also pretty well protected. So, I think we'd have to see a really meaningful slowdown in China's economic outlook to have a major impact. But remember, as we've already discussed, we've got a 1 million ounce deficit this year. China's slowdown isn't going to make a big dent into that projected market shortfall in terms of supply and demand balances.
Yeah, Ed, you guys at the WPIC, I mean, you had a new report out. I read it this morning, and you're making that connection against hydrogen fuel cells and how they rely on platinum as a key catalyst. We keep hearing about the potential for hydrogen to boost platinum demand, particularly in those fuel cells. How realistic is this? And what are the signs that you're seeing that hydrogen is genuinely making a difference for platinum demand right now?
So I think it really is something that is going to happen. It's more a question of the timing of that, and does it fit within someone's investment time horizon. The hydrogen market has developed more slowly than we were initially expecting it to. But we are seeing, I think most importantly, the government support in terms of subsidies around the world are now beginning to, those funds, those dollars are now beginning to flow. So if we look at the total subsidies available globally, they've gone from around $50 billion back in 2022 to over $300 billion today. But the kind of, well, whilst those subsidies are available, the companies that want to produce green hydrogen or produce fuel cells, which take that green hydrogen and use it to generate electricity, those companies are only really getting to final investment decisions now. So the expenditure from governments and from those companies just takes time to come through. Then you've got a construction time period. So I think in terms of the outlook, our expectation is that hydrogen-linked demand for platinum is going to become the most important end market in terms of demand. But really, we're getting into the 2030s here. So it just takes quite a long time for that demand pool to come through. In terms of the numbers for this year, it's around 1% of total demand. So it is beginning to kind of grow up, and it is growing extremely quickly. But realistically, it is back end loaded towards this decade and into the 2030s.
Yeah, interesting. Okay, so more of a long-term play there. Platinum is becoming more mainstream. I mean, we saw a ton of reports this week about Costco now selling platinum bars alongside gold when they first introduced that this year. How do you see this increased accessibility affecting market dynamics here? I mean, obviously, you're excited to see those platinum bars on Costco's shelves.
Yeah, I think it has been interesting, and it's certainly something that the US press in particular has got particularly excited about. I think the reality is, though, that platinum platinum products are and have been freely accessible. Well, not freely accessible, you've got to pay for them, but readily accessible to the investment market for a very long period of time. What is really coming about as a result of this interest in Costco, selling them alongside gold and so on, is that it's just, in a way, it's just kind of made more people aware that platinum is an investment product, and as a result, perhaps making people consider platinum as an investment, whereas in the past they might not have. So that's been really helpful. If we look at the overall physical bar and coin investment market, it's not just the US that's driving investment demand. China is also a really important market, having grown from virtually zero in 2018. Our projections this year for physical bar and coin investment demand in China is around 250,000 ounces, which is broadly on a par with what might be expected from the US, depending upon how the rest of the year plays out. So that both markets are really key to that investment activity.
Right. And talk to me about South Africa. I mean, it's a key supplier of platinum. The country is dealing with energy shortages. We got labor strikes. First, explain what's happening and why those are taking place, and then talk to me a little bit about these challenges impacting platinum production going forward.
So one of the things that was a really big factor behind sort of supply issues last year was the ongoing electricity shortage in South Africa. Now, a lot of those problems really have kind of been solved now, or at least they're not as acute as they were last year. In terms of the labour environment in South Africa for the platinum miners, actually things are pretty stable right now. Most of them have agreed long-term sort of wage agreements with the unions and so on. So it's a relatively good operating environment from a labour perspective. The big challenge is really just economics. It's just as I mentioned earlier, it's really the pullback in the prices of palladium and rhodium that are just sort of eroding those market economics for the mining companies and just causing them to try to restructure their business operations. But it isn't just South Africa. 11% of global platinum supply comes from Russia. In terms of palladium, Russia's around 40% of global supply, so much, much more meaningful. Obviously, you can have some interchangeability between platinum and palladium in automotive applications in those catalytic converters. So the impact of sanctions on Russia and so on are much more meaningful for palladium than they are for platinum, but ultimately there is a feed-through effect from that. Now, one piece of news that's come out over the last few days from Russia, which is quite interesting, is that platinum and palladium are going to be used to be put into the state reserves. So the state is going to start buying these metals again, which could be quite interesting in terms of market dynamics and potentially tightening up the markets through the course of the next couple of years, perhaps.
Yeah, interesting. I mean, we've seen central banks continue to purchase gold, around the world, especially in those emerging markets. Or could we see a similar thing here on the Platt side? I mean, what does that mean for the long-term market? Are they seeing something we're not seeing? I mean, that's a pretty big one when they're putting that in the reserves.
Yeah, absolutely. I mean, I think outside of Russia, it's relatively unlikely that we would see governments taking that sort of action. Right. If you look at the gold market in contrast to platinum, obviously it's significantly bigger market overall. There's a much more liquidity. Platinum doesn't necessarily meet the reserve criteria for a lot of central banks around the world in the same way that gold does. But I mean, it's always possible. But I would say it's relatively unlikely.
Yeah. And I mean, not to mention, you just talked about that supply gap too. I mean, a lot of this current supply gap is being filled by above ground platinum stockpiles, essentially reserves that have been saved up for years. How long can we be dependent on these stockpiles before facing real shortages here?
I mean, that's a really good question. And, it is one that is quite difficult to answer in a hard and fast fashion. So right. If we look at above ground stocks, and sort of estimate what level they need to fall to see tightness come into the market, the kind of rule of thumb in commodity worlds is around 6 months of demand being in above ground stocks, is the kind of pinch point. Now, on our numbers with platinum, we get there to below 6 months of demand on our estimate of above ground stocks before the end of this year. So we're pretty close to reaching that point. However, we don't include ETFs in our above ground stocks, and we don't include working inventories held by automakers and other industrial users. A lot of people who are active in the market do consider ETFs and working inventories to be a part of above ground stock calculation, and so that kind of has a bearing on how they behave in the market and how worried they are about the availability of platinum in the future. Ultimately, ETFs can be a source of supply, but we've done some work on this recently, and it's only likely that we'll see meaningful ETF outflows at much higher prices. So that's the kind of dynamic that's needed to make above ground stocks freely available to the market. And I would argue that working inventories for the automakers and industrial users, that's part of that inventory is part of their business activities, and they can't really produce a vehicle and sell it if they don't have platinum available for the catalytic converter. So I think the kind of question of above ground stocks is one that we'll probably see people active in the market not being tremendously worried about them until suddenly there isn't enough material available.
Yeah, I mean, if these stockpiles are depleted faster than expected, obviously this could lead to sudden price spikes in prices. No, I mean, what would it mean for industries that need platinum at stable prices?
So I guess that's a good question. Most of the end users, with the exception of arguably jewelry and investment demand, they're relatively price inelastic in terms of demand. Ultimately, if you're an automaker, you have to have platinum. And so if platinum was 3 times the price it is now, you're still going to need to buy it. You can't really control that. And that's somewhat similar to a lot of the industrial applications as well. So I think the kind of price dynamic in terms of how that would feed through into demand in the future is actually relatively, demand isn't going to change that much depending upon what happens with the price in the near term. Over the longer term, you can substitute palladium for platinum, but in automotive applications to a certain extent. But it takes a long time for those changes to come through. So generally, it's a market that's categorized both in terms of the demand, but also in terms of the supply, with a high degree of price inelasticity.
Yeah, interesting. We saw it on the gold side this year that people were really getting into the jewelry demand, right? I mean, we started to see a lot of places like India even switch from buying gold over to silver because of the price points. And there's been a noticeable rise in platinum jewelry demand too, especially in India, Europe, partly because it's relatively affordable compared to gold, I suppose. Is that what's driving this trend? And can it continue despite economic challenges?
I think it probably could ultimately. The high gold prices seem to have reached a level where they're beginning to price consumers out of the market. Right. And so when they're looking for alternative options that are lower cost, platinum obviously would fall within people are naturally going to come across platinum jewelry as a result of that, and that could ultimately be helpful for future demand. I'm a little cautious about getting too excited about the outlook for jewelry just yet, because over the last 10 years or so, we've seen a consistent decline in demand, principally driven by shrinking demand in China, which has been offset to a certain extent by that demand growth in North America and Europe and other markets. Looking ahead, one of the interesting things that's likely to happen or expected to happen in the not too distant future is the launch of the Guangzhou Futures Exchange, platinum and palladium futures in China. And that potentially could be quite transformative. So if we look at why Chinese jewelry demand has shrunk so much over the past 10 years or so, it's really very specific to the way that consumers behave in Asia, in particular, when it comes to jewelry purchases. So a lot of new jewelry purchases are made by or funded by selling back old jewelry. And if you can't manage the price risk as a fabricator and jewelry retailer, then you've effectively got to charge a big premium on the selling price of that product and a big discount on the buyback. Now, consumers don't really mind about that when prices are going up, but when prices are coming down, that really dents consumer sentiment. So the potential for these for price risk management to be introduced into the platinum jewelry market in China really could be transformative. And it's the amount of jewelry demand that has been lost in China is 1.6 million ounces over the course of the last 10 years. So that's a big potential area where we could see some of that lost demand being recaptured.
Yeah, interesting. Well said, too. Okay, Ed, before we let you go, got to get you off to get a pint, my friend. Given all the challenges, the supply issues we talked about, these potential rising hydrogen demand, and then these general market uncertainties, what's your overall outlook for platinum in 2025?
I mean, so we see deficits continuing for the foreseeable future, effectively. So we've got a 1 million ounce deficit this year, a little bit more than 1 million ounces. Yeah. In 2025 and beyond, currently we're sort of 700, so 750,000 ounce deficits, roughly. And unless we see something fundamentally change in terms of supply, those deficits are on our numbers fairly well embedded. So ultimately, if we think about how the platinum market might evolve in the future, at some point we would expect those deficits, the rapid depletion of above ground stocks and so on, to begin to be reflected in investor demand and so on. So, there is a lot of interest in the potential reaction to those deficits. And in a way, it's actually helpful for investment demand, which will obviously accentuate the deficits. And it's helpful for demand in other areas as well.
Yeah, strange. Well, let's see if Costco can, add to that deficit. Edward Sterck, Director of Research at the World Platinum Investment Council, joining us from London. Thanks for making the time, Ed. Appreciate it.
Well, thank you very much for having me on, Jeremy. It's been a pleasure.
Yeah, absolutely. We'll have you on again. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We got great content coming up all week long, including some investment data. We got more economic data, and we'll have it all here at Kitco. See you next time.